So if you have your money in a bank, if you use credit cards, if you have an auto loan, you have a mortgage, well, this could impact you because we are about to see bank failures. This is not just an individual failure either. According to the Federal Reserve Chairman Jerome Powell, he says more banks will fail. And this is going to happen very soon. So we're going to address this and then we'll talk about what is going to happen moving forward, why banks are potentially going to fail, but it's not just banks. Businesses are going to struggle as well. So we'll get to that in just a moment. All I ask is one thing, takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So in just a moment, we're going to listen to the Senate Banking Committee. They are grilling the Federal Reserve Chairman Jerome Powell, and this just happened last week. But in this committee, they are wanting to know what is going on. Why are we potentially going to see problems, and who is this going to impact? But let's get right down to it because one of the senators is asking the question, and Jerome Powell is going to answer it. So let's listen to this right now.
Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk.
So they are going to talk about commercial real estate. That's the big thing. They want to know what's going on with commercial real estate. That's where the problems are starting. Let's keep listening.
And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me see. I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too.
I want to jump in here really quick. One of the big things that he's talked about, commercial real estate. You go look in downtown Seattle, downtown San Francisco. Look at Los Angeles. All right, you look at Chicago, New York. Okay, it could be Miami. It doesn't matter. You look at some of these downtown areas, and you see commercial real estate, big buildings that are almost empty. They're sitting vacant. Well, the bank is not getting any money from them. The bank is struggling. The bank is the one that is holding on to that loan. But why are they going to keep paying it? Why are they going to go and refinance that loan and keep it? They're not. They're just going to let that building just go. Because why would they want it? Well, here's the issue. Banks are going to struggle. And he's going to say it's not the big banks. It's the smaller and medium-sized banks. But the big banks are going to feel the ripple effect. The American people are going to feel the ripple effect. Businesses. You go look at a coffee shop that was servicing those thousands of people that were in those buildings. That coffee shop, if they are still open, is probably struggling. They probably had to lay off employees simply because they do not have the demand. Nobody wants it because nobody's there. Let's keep listening.
And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them. And we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues.
He says the smaller and medium-sized banks have these issues. That's not 100% correct. There are large banks that do have this. However, the large banks also have the capital and the liquidity to handle this. It's the smaller banks, the medium-sized banks, that we are going to see fail. Those are the ones that there's going to be a run on the bank, where the customers are going to go to the bank, say, hey, I need my money, give me my money. And the bank's going to say, sorry, we can't give you, that $80,000 that you have in our bank, but here's 200, here's 2,000. Let's start there. That's what we're about to see. Let's keep listening.
We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you.
So he says it's going to be just like that for some time. They're going to continue to work with the banks. They're going to continue to work with the small, the medium, and the large banks. They have been for years. But that does not mean we are going to be, get out of this unscathed. We are going to feel the effects. And the one thing I just want to warn you is if you have all your money in one bank, take that money, take some of it, diversify it. Because if that one bank were to fail, and then you cannot get your money, and I'm not saying you're not going to ever get your money. Most banks are FDIC insured. You're going to get your money, right? The Federal Reserve and the Treasury have both come out and said they're gonna insure everyone's deposits, not up to $250,000. They'll insure every deposit, which would be impossible because there's not enough money in the FDIC account in order to ensure how much money has been deposited in banks. But the big news here is go diversify. Because if he's saying there's small and medium-sized banks that are at risk of failure, well, the big banks could be there too. So if all your money is in Chase Bank, maybe go take some from Chase Bank and move a little bit over to your regional bank, your local credit union. Go diversify it. Make sure you're safe. All right? The next thing I just want to tell you is if you are paying bills, if you're running a business and you're using credit cards, just be aware, depending on who that credit card is, where it's issued from, that creditor may decide that, you know what, you're a risk. We cannot continue to loan you this much money. So they may start cutting your balance. They may start cutting your available credit. And if they do that, and you're using that credit card for business, your business could then struggle and potentially go under. So just understand that these bank failures, even though you're probably thinking, well, I'm not in commercial real estate, I'm waiting for the perfect time to buy my home. Well, guess what? It may not happen soon. It may be a little while because there could be a lot of issues hitting the United States economy very soon. So just wanted to fill you in on what's going on at this time. That is a huge concern that many people are speculating. We're going to feel the effects over the next 1 to 2 months. So just be ready. But that is what I have for you guys today. Again, thank you guys for watching. Consider subscribing. I'll see you guys on the next one.